up guys? Logan here again with another video. First off, I want to thank you guys for all the support as always. Make sure you leave a like, make sure you subscribe, and please leave a comment below, as I think this video is going to help a lot of people out with their trading, specifically on their credit spreads. And we're going to talk about rolling a credit spread and how I did this to minimize my losses on this position specifically. So I took a $1,539 hit this week on one of my spreads. This isn't the end of the world, as I managed to minimize my losses down to around $1,100 on the week through rolling spreads, but also diversifying into IWM trade, and the IWM trade made me money as well. So we'll get into that and we'll go to exactly how much I lost this week and why it's just a 2-week setback for me, which isn't a big deal considering I'm batting 63 for 65 on credit spreads. And the 3 things that I made the realization on is the 2 times I've lost, the VIX was over 30, which was specifically 32 this time. They both were on SPY trades. And for number 3, it was during tech earnings week. So when big tech had their earnings, I have those now noted. So if that ever happens to me ever again, I'm just gonna close my positions for the week. And I'm not gonna trade during big tech earnings for as long as I'm trading credit spreads, you know, for pretty much ever, right? So that's the one thing that I'm gonna take into consideration, is those 2 losses were on big tech earnings weeks. So if I just skip those weeks, I can live to fight another day. Essentially what happened here, if we jump right into the SPY play, I had 31 contracts for an average credit of $9. So I was gonna do really well this week on SPY, make about $300 roughly, right? Just under $300 this week. So I made the realization on a Wednesday that I had sold the 370 put, bought the 368. Now the VIX was ramping up into close, so I decided to close my entire position, take the loss, because if we were to drop another, let's say $5 overnight, or even $3 and open up at 370, I was running the risk of losing my entire collateral. And in this play, I had about $6,200 put up, and in my IWM play, I had $3,000. So at that time, in this specific moment, I was in with $9,200 worth of collateral. IWM was doing completely fine. I think they were at 209 and I had a 202 sell. So I had a pretty solid runway on IWM, and they had already dropped a lot that day too. So if we're looking at SPY right here, that's the one thing I made that realization with was, hey, you know, you have $3 of runway, which is not very much on SPY. Tesla and Apple were reporting their earnings after hours. So for my risk to reward management, I said that's crazy, because if they both fall a couple bucks, you know, in Tesla, you guys saw them fall like $60. I was like, I can easily see SPY going under 370 just off those 2 stocks alone. So that's what I did. I was like, I'm just gonna close the position. We'll live to fight another day. And right before the end of the day, I moved over into this position. So I took some of my collateral and then I rolled it into the 355, 353 put. I had $18 worth of runway going into close because we closed around 373 on Wednesday. There's still really good credit. I got about 4% here. So knowing that I had, you know, $18 worth of runway, and this was by Friday because this expired on Friday, and I picked it up on Wednesday because the VIX was so high, I felt really confident knowing that we had already dropped 2.5% on the S&P 500 that day. So I wasn't too worried, right? I knew that, hey, if we did open up down again, like, yeah, I could just close my position out, but I gave myself $18 of runway, which I think was fantastic considering SPY opened this week around 383, 384, right? I had a 90% chance of profit on this play by Friday when I was entering Wednesday. So I felt really good, and I was getting really good credit because of the VIX being so high. So that's the other thing that I did, was I took $4,000, as you guys can see here, it's that $2 spread, and I had 20 contracts. So if you multiply that, it comes out to 40, or it comes out to 4,000 when it comes to options, right? I essentially just opened this position knowing that I had such good run room. And then this was on Thursday, as you can see the SPY share price. I took the picture right when I woke up. This was already up 87.5%. So I was really confident holding this throughout the week. And yeah, I could have closed it there, but I figured why not try to make my other $20? And that's where SPY got shaky on Friday. But I didn't let it affect me because it didn't get bad enough to where I was even concerned about closing this position. So let's subtract the 1,539 and put this 160 on it. So that would bring us to a total of $1,379 loss on the week. Now let's add my IWM position to this. and we'll see what my total loss for the week was on credit spreads. So this is my IWM for the week. You guys can see I entered some of the spreads on the 25th, and then I picked up a couple more on the 28th so I could add more positions. So what I did here was I was making 160, and then if you add 36 and 17, we get $53. So if we add 160 and 53, that comes out to 213. So if we go back to the calculator, we'll take our 1,379 and we'll subtract 213 from it, which brings me to $1,166 on the week. And now I did pick up one other position, so we can go and do the math there and check that out and see what the total amount on the week is. That one was for 22 credit, this one was for 28 credit, so we'll subtract 50. So I ended the week totally down $1,116, which you guys know I shoot for $500 a week trading options on the market. It's just a 2-week setback, and maybe 2.5 weeks, I guess you could say, because I'm just over. Now I showed you guys what happened to me this week. Let's talk about rolling spreads and why I decided the strikes that I bought and why I decided to roll it even though the week had become volatile. So if we look at spreads, a lot of people, when they say they're rolling spreads, they'll roll it to, let's say, the next Friday or 2 weeks out or just someday in the future, but the same strikes. Now, I'm personally not about that. I don't think it's very smart to, even though you're going further out, let's say you had a February 3rd and SPY right now is at 369.45. So let's say you went to that. Let's say you had a 367 strike price and you were getting nervous because we're at 369.45. Now some people, when they rolled their spreads, they would shoot a whole week out. So like, let's say it was February 10th, and they could also put that position in here where they sell the 367 and then let's say they buy, you know, the 365. So you're looking at this and you're like, oh my gosh, 30 credit, like that's okay, not bad for the $2 wide spread. I'll take 30 credit, you know, any day of the week. So they go to review and then they put it in, and then they make the realization that I'm so close to becoming in the money. I'm only $2.50 away on SPY. That's the one thing I don't like about rolling the same strikes into a further expiration. Now, when you're rolling credit spreads, it doesn't mitigate your entire loss. What it does is it essentially mitigates part of your loss, knowing that, hey, I lost $1,500 on SPY. I could have closed all my positions and ate a $1,500 loss. Well, I reduced that down to just under $1,200 on the week by rolling my spreads into other positions. The position that was 90% chance of profit by Friday, at the end of a day that we were down 2.5%, was so far out of the money that I had another $18 worth of runway from where we closed at, which was more than I started with on the week, and we only had 2 days. So those 2 days allowed me to monitor SPY, and with a $9 drop on SPY on the day, I assumed that if we had anything worse than that the very next day, then I could just exit my position and take a small loss, right? I really had faith in the market in general when it came to this week, because it wasn't like the VIX was at 80 like it was back in March where we were hitting circuit breakers. Now, if that was the case, of course, I wouldn't have taken any of the positions. But with the VIX calming down towards the end of the day, and we were at about a 31 on the VIX, I said, okay, the market's already dropped 2.5%, Powell was speaking, so I'm gonna take these strikes, $18 worth of runway on SPY. But let's say you were in this situation where you had the 369, 367, and you're rocking 45 cents of runway and you want to get out of that because it doesn't expire till February 3rd. Now what you could do is close that position, eat your loss, whatever your loss is at that time, which if we did that right now, 367 or 369, 367, it's a 57 credit. Maybe you were only supposed to receive 20 credit, so now you're gonna take 3 times the loss on your credit. You're gonna pay a debit back to them so you can close your position. And then let's say you went back to sell, you uncheck that, let me uncheck the buy as well. And then you scroll down to another great position, like, hey, look at right here, if I did the 348 for February 3rd, and then you decided to buy the 346, you're receiving 12 credit for only putting up $200 worth of collateral per position. That's a fantastic percent probability right there. I mean, that's 6%, and that gives you over $20 worth of runway on SPY to expire on the 3rd. So you just hit review, you know, and I currently have about $9,500 worth of collateral. So just for an example, of course I'm not saying do this, but let's say I wanted to grab, you know, 10 contracts for 2,000 collateral, and I would make 120 back of what I lost. So let's say I did take a 20% hit on my collateral right there. Well, I know that I had 6 grand into that SPY position, so I took a hit of about 1,200. So let me just roll, I'll just roll some of that collateral I have left into a different position, and now I'll take less of a hit on the week. And right now it would only be 1,080, and I can start fresh next week with a brand new mindset and a brand new market to work with. And then the last thing I want to touch on is when to take a loss on a credit spread, and that's what I did this week. You guys know my stop loss is 20 to 25% of my collateral. So when I was at 373 on SPY, I did the math to where 1,539 divided by $6,200 worth of collateral is roughly 24.8% of my collateral. So that's enough for me to close that position and know that I can just make it back over the next couple of weeks, and also by rolling my spreads into different strikes in different days, and whether that was, you know, Friday or maybe next Monday. It's really up to you based on the credit you're receiving. But once I saw that I could get 4% by dropping it $18 of runway because the VIX was so high, I went with that position, and that's what I did. That's why I took that position that I took, was just for the fact that I had so much runway. We had 2 days to expiration, so that if anything else catastrophic happened overnight, I could just hop out of my position. Only went in with 4,000 this time, even though I had about $4,800 worth of collateral freed up after taking that loss on the position. Now, and this is currently my performance over the last 3 months on Robinhood. As you guys can see here, my Robinhood account got up to $40,050. Now, a lot of this is my credit spreads, where I shoot for 500 a week off options, and then some Tesla shares as well. And then this is what I ended the week at after taking a $1,200 loss roughly on the spreads, and then about $1,800 to $2,000 loss on my Tesla shares. Now, if we go over to here, I'm still up $8,500 over the last 3 months. Most of that coming from my credit spreads. Essentially just set back a little bit in my market performance, but it's not a big deal, as I know I'll make that back and then some, because of how good the last 3 months worth of performance has been in my account. And now if I could replicate that and make about $12,000 every 3 months, that would be 48 grand off the market a year, which is more than I can ask for, honestly, when my whole goal in the first place is to make anywhere from 20 to 30,000 a year off the market, which is close to a minimum wage full-time job. That is not the only thing I have going for me, and I think it's a fantastic goal to shoot for if you are an investor or a trader. Now, everybody has their own goals based on their own account size, but that is totally up to you. That's everything for me, guys, in this video. Do not forget to leave a like. Do not forget to leave a subscribe on this video as well if you guys have yet to, and then also a comment below helps the channel out greatly. So I'm really excited for the future. I think we'll get some good opportunities to make some good trades coming up here shortly, and I will see you guys in the next video. So stay awesome, enjoy the weekend with the friends and the family you have, and I'll see you guys on Monday.